Recording, hand you off. Hey, Andy, Jamie, how's your Thursday?
Hey, Scott. Yes, happy Thursday. And hello, Jamie, my
Hey, Andy,
Texas
Scott.
friend. How are you?
Oh, doing all right, doing all right. Friendly reminder, the market's closed tomorrow.
That is true. That is true. The market is closed tomorrow, and looks like by the attendance today, we people are getting a head start on the Easter weekend. So, with that being the case, guys, this is probably going to be kind of an abbreviated version today. Probably looking to go into maybe 45 minutes at the most. But we will. I definitely have something to share with you today, so I think it'll be worth your while. But before we do anything else, let's dive in to the disclaimer here and take care of the legal stuff. Guys, this webinar is for educational purposes. If anything that you hear or see on my screen or Jamie's screen should not be construed as investment advice. All right, if you are looking for that, you probably want to look for a registered advisor, a stockbroker, somebody who hangs that license in their office. But we're going to have a little fun today, talking about some scans and looking at some charts and things like that. And of course, looking at the Holly AI. Before we move on, guys, I just want to remind or tell the new people in here about our support, education, and training here. Um, Guys, we realize the software is extremely powerful, but as we also know that it's very intuitive, and it's our job to convey that to you and show you how easy it is to use. Once you get a feel for it, and it takes a little time, but we give you all the training and education you'll need here. All starts in the trading room with Barry. He shows his desktop. You get to see the software in action, and not only that, you get to hear him calling out trades he's finding on the software, and not to mention all the 500 plus people who are in there, most of which who are using the software and really helping each other out. It's a great place to start. Also, guys, we have webinars Monday through Thursday in the same 5 p.m. Eastern time slot. It's usually a mix of Jamie, Steve, or myself, paired up in twos, but on Wednesday, you can see Dan Merkin and Brad Williams. It's our CEO and CTO, and they will share their insights and talk about some stuff coming, possibly coming down the pike, and all the maybe new bells and whistles. It's also a great place for Q&A. And then we have Friday support session, guys. We will not have one tomorrow. It is a holiday. Markets are closed. But typically on every Friday at 11 Eastern time, we have a Friday support session. It is a Q&A. We open up our GoToWebinar, and you ask the questions just like you do in these afternoon webinars, and we answer you and demonstrate for you and build top list and alerts with you. It's a lot of fun, and I promise you're going to learn something, even if you don't have a question. Come in there. All right, let's talk about TI University. This replaced well over a year ago our 101s. We got too big for 101s, but it's been a great success. It's 4 classes divided up, starting at beginners 101 on Monday, and then graduating each day to advanced 401. They're hour-long curriculums, and then at each class we have, or the end of each class, we have a Q&A. We open it up, so any questions that you might have that we went over, we talk about that. So, boy, I tell you what, you spend 4 days in there, and then you come to that Q&A. By the end of 1 week, you're going to have a really good grasp of the software. And really, that's a short amount of time. Think of any job you go into, how long it takes you to learn a new job. So, if you're gonna be serious about trading, first of all, you need to invest the money in software that's going to help you profit. Okay, i.e., trade ideas, and then you need to spend time and learn it and put the effort into it. Okay, you got to take trading seriously. It's not a game. All right. Brokerage Plus, guys, this is a way for you to automate your trading, whether it be full automation or whether it be gray box. Gray box meaning let the artificial intelligence or your alerts get you into a trade, and then you manage them. I think that is the best way to use our software, and any trading strategy that you have. But anyway, you want more information about that, go to trade-ideas.com/beta. You really need to look into this. It's a really cool interface, and it's so much more than just auto trading. So check it out. All right, let's go over our agenda for today. We're going to do a market recap. Cue the record. We're going to talk about do a Holly recap, cue another record. Then we're going to talk about a top list that I think it can be wise to use after when you get into trading, guys. The biggest problem I see with a lot of traders is they overtrade. Trading in the first couple 2 or 3 hours of the day can be really good, and then after that it can get really difficult. So I'm going to share with you a top list where can help you maybe stay away from the buy buttons, and something you can just kind of monitor and looking for opportunity. It's a consecutive 15-minute candle in both directions top list. It can be used as playing reversal for a quick scalp. I'll talk about how I would use it, and we'll go from there. But that's about it. And then we're going to wrap it up, say pretty quick, let everybody get off to their long weekend. Let me just back out of this, and let's pull up the old spiders. There's a 15-minute candle I will share with you. Oh boy, I got a lot of stuff on here. All right. And boy, you talk about the broken record. But here we are again in the spice. Look at this awful week. I mean, my Lord. And really, this is just a week. This is going back to last Friday. But really have gone nowhere. We've been trying to kind of gap up each day and just cannot hold that gap, selling off. Pretty much ended the week where we started the week. No real gain or losses significant anyway. Makes it tough for any style of trading that you're doing, and it makes it tough for Holly, and we've been talking about that. And once again, guys, going back here to this really back to March the 25th, I mean, the whole move up has been basically a few gaps. I mean, you had a big gap here, you had a pretty decent gap here, and really it's just I can look at a chart and tell you how difficult it is going to be from trading just by the size of the green bars in any given time. You go back in time. Oh, look at all these nice days where you had color, you had green, even, and if you're, these can be very nice days too if you're a good short seller. But look at all the color we have in the days. Okay, now zoom forward to what we have now, and man, it's just, a lot of Morse code, we like to call it sometimes, a lot of gaps. It almost looks like an ADR. I'm talking about these ADRs that you see that they just gap and they don't trade. Yeah. And it makes it difficult. And obviously, over the last several weeks, it's been difficult for Holly as well. Today, big gap up, get hammered, go through yesterday's lows, and really, I'm sorry, but yeah, today was right here. It was not a gap up, it was a gap down. So, I'm not going to spend a lot of time on this. Here's our level on the SPYs, and, it looks like we have a date, but boy, I tell you what, just when you want to say it's a sure thing is when we'll reverse, in all likelihood, we're going to go have a date with that at some point. But like I said, don't bank on it, because when you go banking on something in the markets, they will get you. They'll get you good. Let's take a look at IWM. That's what kind of led us down yesterday to a really ugly day. Not much of a bounce today. You can see there. It was a gap down and never really, closed actually slightly lower. So Want to keep an eye on that. Want to keep an eye. I think this is what you probably watch for tomorrow. If it can hold these two averages, you got the 20 and the 50 converging here. That's where we bounced today. And not only that, you have a nice support level here. And it's rare I pull out the IWM as a market leader, but we have seen several few months ago where it did eventually pull the other averages down after a few days of head start of immense selling in the IWM. So keep an eye on that. If it cannot hold the support and these moving averages here, takes out today's low, beware. That's probably the only, the only bogey I see. I Qs, very healthy. Diamonds, very healthy. Look at that. Fought back and closed above these two highs going back yesterday. Very healthy there. Spiders, kind of in a mess for 5 days, but nothing bearish. So keep an eye on the IWM. I think if it can hold up, there's a really good chance we're going to take out these highs. But that's what seems to be the kind of the if there's going to be a thorn in the side, that may be it. All right, Jamie, anything you want to add?
No, not really. It is what it is. Hopefully, though, we're going to be moving one way or the other relatively soon. Maybe it's after this week is over. Hey, get back into all-time high territory. Maybe we could get some traction or take a sell-off. But as you said, some colorful bars on the daily would be nice, some type of range. So yeah, just what you were illustrating on the SPY there, it reminds me of back in the old days when we used to try to play those types of setups in a stock, just scalping those little ranges. Hey,
yeah,
it'll work 5 times in a row, and then boom,
yep.
Then it won't work, and it'll take away what you made on those 5 trades. So just extrapolate that to the whole market, and it's pretty slippery slope right now. My compare count windows this morning were dead at 50-50. So what does that tell you? When you see that type of action, you're like, okay, whatever you do, better be in super scalp mode. And of course, there were some runners, of course, not running as much as we've seen runners run in the past, but, everything ebbs and flows with the overall market. But a couple of, a little bit of risk on spread presented from Holly, a couple from Neo, a couple from 2.0. Actually not, 2.0 had a couple, Neo had one, and Holly Grail had a couple that weren't very big. I think 28 cents was the biggest one. But if you're ready, we can go ahead and take a look at those real quick.
Yeah, why don't we do that, and then we'll finish it up.
Yeah, so just let me know when you can see.
I got it.
All right, ladies and gents, got 1.0 up top, got 2.0 in the middle, and got Neo down here. And I've already sorted by risk on, and as you can see, not a whole lot, nothing to write home about. We got a 41-cent spread on ASMB from Holly 2.0. Not a bad little chart. Got an entry signal right here, and then just pretty much ebbing and flowing through that signal line for the majority of the day. This one though, Holly got a little impatient. We got the sideways action, which is typical of her pulling the plug early in reduced risk mode. So, get into it right here. We get sideways action for not quite an hour, about 45 minutes after the entry signal. And she pulls the plug, says, I've had enough. And then we can see what happened the rest of the day. The wiggles got a little bit more severe here. But on the, the good thing, never triggered that original hard stop. So kind of circling back around when I see those 50-50 counts on the compare count window, that's telling me, what, stick to your hard stops, be a little bit more patient. But when you do get a little bit of a lift, don't look it in the mouth too long. It's a great day to employ, the 50-50 methodology when you're not sure. So on this one, we could have flatted or taken the penny with Holly, stuck in the rest, stuck to a hard stop, and got that the majority of that move in the ASMB. Clearly, though, not a lot of traction from the beginning where we can get comfortable and use that break even as a stop loss. That was never on the table. in this one today. I want to go ahead and point out the one short that worked pretty well for 2.0. Used to seeing these in the reverse option or the reverse, but this is a short, so we got a nice signal right here. Once again, hugging, ebbing, and flowing around the entry line. Holly, once again, instead of reduced risk, profit save of 0. We could call that a flat. And then just shortly after that, boom, it releases nicely. Looks like a decent move on the chart. Was a good move, just not very much, to the tune of 22 cents. But a successful trade nonetheless. Once again, getting about halfway through halfway to the stop area, but nowhere in danger of getting stopped out on that one. So on a day like today, it was just being patient with these things, sticking to those hard stops. Let's kind of go down here to the NTNX out of NEO. I gotta say I like this one. This is one of my favorite ones from the day. Not only because we had the nice statistical probability coming from the nice chart strategy from NEO, but that 10 period was in play most of the day, the green line here, and we can see right at the signal, we just had that nice clean opening range break on the NTNX, a little sideways action. Holly reduced the risk on this one, but as we can see, just like the other two that we've looked at, these made it, got about halfway down to their stop loss, maybe not even quite, but nowhere near the hard stop trigger. Get a little sideways action. This one, set up one more time here as we put in these tops and flattened out, came back up here and cracked it again. So, even on a day like today, here we had a position where, if you're monitoring this one closely, trying to extrapolate what might happen, we had the first break here, Holly gets in here. Then later on down the line, we had the second break here with minimal risk in case we wanted to leverage or press that position. So about 44 cents in the spread here between -20 and 24 cents. And lastly, what do we have up here? Shake Shack, which I can honestly say I've still never eaten at a Shake Shack. Am I missing out, Andy? I don't know. But
I ate once, yeah, years and years ago, but I can't even remember, so you're probably not.
they look really nice from the outside, but
I think it was good, yeah, but
never taken the time to go in there. This one looking a little bit different on the breakout. So we get the Shack original buy signal right here. Once again, seems to be the theme of the day, hugging that entry line for the next 30 minutes, get a nice little excursion to the upside. But Holly, not so timely on the exit. In the money here, comes back down here to the entry line, continues the sideways push. Holly closes it out for a flat. Now, what are you going to do? You're going to take a little bit off the top here. You're going to stick with the whole thing. That's basically where it ended up, whether you took advantage of it here or just stuck to your hard stop. Could have consulted the daily to see, all right, when we were up here, we were lining up perfectly with that bar from a couple of days ago, and that seemed to be the stopping point, right? So, the good news is whether you got out up here or stuck with it till the close, just adhering to your hard stop, you pretty much came out the same either way. So a whopping 28 cents. So while the patterns and the spreads of risk on were present today, just not quite as big as we would like them to be, but all we can do is take what the day gives us and acclimate, and a little bit of risk on spread here. But when we look at the overall totals from Holly, kind of a wash, down slightly. What do we got? We got 11 cents, down about 18 cents on a total of 31 trades. So keeping in mind we all pay commission, you probably would have been down considerably more than just what we see here on the gross if you were taking every trade. And that's about all I got, Andy.
Yeah, that's good. I mean, it's been kind of a grind with Holly as well as, but yeah, you pointed out some interesting setups there that did play out, and we're looking forward. I think Holly's looking forward as getting out of this funk, just like any other trader probably is. Not that she's been getting killed or anything. She just kind of been stuck in the mud a bit, but We
Yeah, and
understand,
it's
and we got some
not
things in
as
the work.
not as many stops today as we've had. We had one,
Oh,
two. What do we have up here? Three total stops. So, one of my favorite techniques as of late is letting Holly start to open up all the trades and not really, I'll look at all of them as they come out, and if something really just catches my eye, sure, I'll engage it. But I've really grown fond of just waiting for the reduced risk and the profit save exits, and then looking at the chart and going, okay, we've seen this so many times. What do we think it's going to do from the time that she bails on the reduced exit or the reduced risk or the profit save? And if they get stopped out, so be it. But just like the examples we went over here, they never got to the stop area, and with a little patience, they a little bit. And then even better, on some of the ones that are down slightly, you have the option of getting a better price and lowering the risk just with a little bit of the timing play there when we're seeing her close out with reduced risk and profit save.
All
All
right.
right. Let
Very
me
good.
take it back over.
All right.
There we go.
All right. Let me show my screen here. Can you see it?
Yes, sir.
All right. All right. All right, guys. I'm going to finish off, and like I said, we're going to, probably get out of here a little bit early today, maybe another, maybe 10 or 15 minutes. But I do want to share with you a thought that I know a lot of people have, and that's over trading, and what you can do to combat that. And probably the best thing to do, because I've never been one to tell people, hey, listen, just trade the first 2 hours and just get up and go, go have breakfast and go golfing or something like that. Those are the only good times, because I really believe you can't beat screen time. Even if you're not trading, you're sitting there. I can't express how much you're learning just by watching price action, watching charts. I'd like to compare it, to these 3D pictures you may sit there and stare at on the wall, forever, but over time it'll come to you, and all of a sudden the moment you grasp it and you see everything that you're supposed to be seeing, and that
the illusions, yeah.
Exactly. Well, trading for me was kind of like that, It just, I think so many, screen hours, and it just kind of came to me one day, and I think a lot of it just happens to be that you sit here and you've absorbed all these screen hours and looking at charts and price action, and you'll be amazed how subconsciously you can react just on the stuff that you've learned, just because you've seen it before, and in other words, a bad trade. You've seen this price action before because you've been staring at screens for so long, and now doing what it's supposed to. I'm going to get out. So anyway, one of the things I think can help you, where you can still sit there and absorb price action and learn just watching the market, is have a system or a method that you turn to at a certain time of day. If you go back and you research your trades and you find out, and this was one of my biggest issues too, was over trading, and it's many traders like this. So what you want to do is maybe develop a habit of at a certain time moving on to maybe a strategy that will keep you away from chasing highs or chasing lows or momentum, whatever it is that's not working during the middle of the day. And I know Michael Noss does this. As a matter of fact, I kind of got this top list from him. I changed it up a little bit, but this is kind of what he does during the middle of the day as well. And what it is, it's simply, and we have some in channel 4, we have a couple of windows in there called consecutive up candles and consecutive down candles. Those are 5-minute candles. So if you're looking for something maybe a little more extreme, you can go to consecutive 15-minute candles. So let me show you what I'm talking about here. We'll go in the configuration. And what we've simply got here is a top list, so there's no alert, okay? And we can look at the configuration here, and simply it's just looking for price from $1 to $500. Volume today has to be doing 25,000, and I thought I put a 250,000. I thought I had a, you can always come in here and add some more filters. I thought I had an average daily volume in here, but I don't. But nonetheless, when you see what it's looking for, I think you'd be able to trade it even, if it's doing 250,000, shares today, more than likely it's going to be doing, 400,000 or 500,000 shares a day. So consecutive, these are 15-minute candles. I got a minimum of 5, okay, and then I got a maximum of -5. That appears on the surface to be a paradox, but it's not, okay? What it's doing, it's only going to show you stocks that had 5 or more consecutive down 15-minute candles, or it's going to show you stocks that had 5 consecutive 15-minute up candles in a row. So they kind of work independent of each other. So once again, it's a top list. All right, added some columns in here that will kind of help you, I think. Position in range, position in year range, I think can be very helpful. And you may ask, well, how does a position in year range? Because a lot of times what I'll do when I'm trading these things, I will look, first of all, I'll look for any type of support. Okay, so I'm just going to pull up one real quick and see if we see any. Yeah, that's kind of messy. And today was probably not a very good example. See, this is Netties here. And it's kind of bounced in no man's land, but it's a typical takeout a multi-day high and then bounce. But the idea here, guys, is to watch the price action. This is a top list, okay? So you're not being alerted when the reversal comes, all right? This is where you're going to be like putting in maybe some price alerts. Maybe you see Netties, coming down here, and you're thinking, wow, the daily chart looks pretty good. It's on a nice, pullback here. Maybe I'll put an alert in here if it takes it out. Maybe I'll consider, buying it. It can be up to you. Let's see. Mike, no, this has nothing to do with really Momo. You can see here I have a relative volume column. You're going to see there's some very anemic volume going on today, which is why I said a lot of these probably you got to be careful when there's anemic volume, because they can go in one direction for a long way. But the idea is these are consecutive 15-minute candles, okay? And you have to understand when they're consecutive candles, guys, they're not bars, okay? So theoretically, you cannot have a bar reversal and it will quit tallying as a consecutive candle, because we go off closing candle price and opening candle price of the next one. Or no, I'm sorry, the closing. We compare the closing prices. Let me see if I can show you an example. If it makes sense. Okay, this is a good example right here. So right here, okay, it would stop calculating the consecutive candles because it even see where this close was at 8:14, okay, and this close was at 8:15. So even though that this was still a candle that didn't reverse, it will no longer count as a consecutive down candle because the close has to be lower than the previous close. So I hope that makes sense. I would kind of like to have a bar reversal filter. Maybe we'll work that in the future, but this still can be very effective, okay? It's just when you do have, when you have a candle like this, it can throw off and quit counting it, because it no longer counts it as a consecutive down candle because that close was higher than that close. If that makes sense. But while I'm looking at this ugly chart and this AR, this is where I think, guys, you have to be careful. All right. So when I'm playing these, I'm always leery of death marches like this. Okay, you got to be real careful. It's okay if you find support, and I actually put a price alert in there earlier because I did see some nice support here. But really didn't get a bar reversal. You know, you got one here underneath the support and nothing really came of it. All right, so the point I'm making is, guys, is be careful when you see these death marches in a chart because they can be very dangerous. And another thing about a theory like this, you're going, even though you may get a bar reversal and it looked good, it looks really good. Remember, it's still in an ugly downtrend, okay, on the 15-minute chart. Okay, so when I'm looking at these, I'm looking usually for a quick scalp, because what you'll have a lot of times is short sellers who, and what they'll do is when you do get a bar reversal, they will cover their shorts. All right, so not only might you have fresh buying coming in, you have shorts who are rushing to cover, and it can cause a nice, sometimes a nice little 15, 20, 30, 40, I don't know, minute. See, there was one today. I can't remember the time frames in here, but let's see. ENLC was pretty good. Yeah, there you go. Now, this took time. Now, here's what I'm talking about. This chart, to me, look at this daily chart. Much more constructive. I mean, it is pretty much in the long term, but look over the last several months. It's much more constructive. Okay, you have a chart that's coming down to some nice little levels of support right here, and look what you got. It took a little time, you know, for it to get there. You actually had the bar reversal right here. If you did buy it on the bar reversal, you may have had to sit through a little bit of pain, maybe 7 or 8 cents, nothing major, and then you got a nice little bounce. But you have to be careful, guys. When you're wrong in these, okay, remember, it's a contrarian play. Okay, even though it has a bar reversal, that doesn't mean the trend has changed. Okay, the trend has not changed. You just got one bar reversal. Okay, so these can be good for a nice little move, but you have to be careful. And when you're wrong, just get out. Don't fight it, because your human nature is going to tell you, gosh, you can't keep selling off. This thing's got to bounce, you know. And in reality, it doesn't. It doesn't have to do anything. And more than likely, as long as you're fighting it, it's probably not going to do anything. But except keep going in the same direction. But this can be a strategy, and it can work to the upside too. And like I said, there wasn't a whole lot of real good examples today. Let me put it on another time frame and see if anything else pops up here. Let's go with maybe later in the afternoon, 1 p.m. my time, which would be 2 hours before the market closes. Check the upside ones. And let's see, let me get the time here. Yeah, that one right there was short-lived and then bounced. Yeah, another one. You can see, I mean, even so, there was a little bit of a scalp there, but you had to be quick. A lot of these just kept going. Now, that was a pretty decent one. Okay. You had your 6 green bars, and then lo and behold, that would have been a pretty decent scalp there to the upside. I mean, to the downside. That one, yeah, that one still, you can see, guys, you can see what people are doing here. Okay, you get a bar reversal, and whoop, you get a lot of times you get a big red candle, because people who are long, been long, all of a sudden, boom, getting tired, and they scalp it and they get out. I don't know where this one is. 1 o'clock. Yeah, I'm trying to figure out where that one is, Jamie, but it didn't make sense to me. There's a nice one.
Oh, that was beautiful.
Yep. I mean, you got it early. I mean, this was earlier, but if you're watching this is what I'm saying. You don't, just because it comes up, you don't just short it. I mean, it's still in an uptrend, but look what happened. You got your bar reversal. Not only do you have longs, it's been riding this wave, finally getting out. You have shorts probably playing the same type of strategy, and you could have got a nice little profit there on that one. So you can see, guys, it's a method that'll keep you away from just, you know, looking around and, like I said, chasing, chasing alerts whether it be the long side, upside. This is a method that will kind of keep your powder dry during the middle of the day. And see if I can find a good one for the downside here. That one tried. I mean, you can see there's your bar reversal. Got a little bit sloppy, but still a little bit to the upside. That one really didn't work. Well, I can't take that back. You know, it worked a little bit. I mean, you got about 15 cents out of it. You can see where these guys can be really quick scalps because once again, you're going against the grain. Look at this ugly candle. Okay, you sure you want to buy something right here and try to hold on to it for a long move? I mean, it's been selling all day for, you know, relative volume. Another thing too, guys, the reason I put an earnings date in here, if it's an earnings date, you know, I'll probably leave it alone. Okay, guys, it's very simple, but I will share this with you, save you a little time putting it together. And once again, it's a strategy that will kind of just help you get your mind off of over trading, and you're sticking to a method where you're finding these. And trust me, you're going to see some really good ones in here. Where you get up to like 15 to 18 to 20 candles in a row. Sometimes they could be really good quick movers for a nice gain. But today, of course, probably lately too, it's just, you know, the market the way it is today wasn't all that great. All right, let me put this back on live during market hours, and I will share this with you. And for those of you guys who are in here maybe for the first time, we have the ability to share cloud links, and they will be able to pull this top list up immediately on their desktop. Consecutive 15-minute candles. All right, there you have it. And you can always, if you don't like looking at them, obviously in the same window, so you're scrolling back and forth, you can also break these out to where, you know, you're looking at them. You got two separate windows. You're welcome, Wally. You are very welcome. Trying to think, I already looked at those. AMAT had 6 down candles today. The trade of the week. All right, guys, I think, like I said, it's a small crowd today, about half of what we normally have in here. So what we're gonna do is we're gonna call it early today. I'm gonna bring Scott back in. I wanted to make it worth your while, share with you an idea, a strategy that will keep you out of trouble and hopefully help you maybe profit a little bit. And Scott, hopefully you're around and you can come back in here and march us out.
Yeah, a couple items on the way out. There's an ebook. Very useful. You get it for free at trade-ideas.com/ebook. Put in your email address to get the download. It's got 5 strategies to win in a post-BTFD market. You should get it. Both Andy and Jamie contributed chapters. We have a podcast, not a new one this week, but should have another one up next week. It's a holiday weekend this week, so we're off. But we usually release them weekly, and you can search for Trade Ideas Podcast wherever you listen to podcasts to subscribe. The code, Holly Bunny, all caps, is good all month long for 15% off your first month or year of Trade Ideas. And like the emails you've been getting say, you can use Easter Holly as a code to save 20% this holiday weekend. So keep that in mind. You have until Sunday night to use that one. Holly Easter, I believe. Actually, it's Holly Easter, Holly first. Easter, all one word, all caps. You'll get an email reminder about that over the weekend, so take advantage of it. If you have any questions, email us info@trade-ideas.com. That's the correct email to send all your requests to. It goes into our help desk software. Follow Steve Gomez on Twitter @TodayTrader. Follow Jamie Hodge @QuantBot. Like Trade Ideas on Facebook @Trade Ideas Pro. And we'll have a recording of this up later on tonight or tomorrow, so stay tuned for an update email tomorrow telling you how to find it. Thanks, everyone. Thanks, Jamie and Andy. Have a good holiday weekend.
Thank you, Scott. Thanks, everybody. Happy Easter.
Happy holidays. Bye-bye.